So the AI trade still looks tired. So in the process, I decided to think about what might be coming for 2026. And I wrote a blog post called Getting Ready for 2026. I used as a core theme something that Tom Lee claimed, which is that he expected about a 10 to 15% correction in the first half of the year because he doesn't see the Fed being supportive of the markets, but he sees the Fed being supportive in the second half. But what was interesting about it is that he's claiming that politicians are going to support the market by being stuck in gridlock after we lose single party control in Congress. Who knows how things are going to go? This is a time for all sorts of prognostications. Through it all, I like to stay focused on the technicals, and the technicals tell me that the market just barely saved itself from a much bigger breakdown. And it is now set up the launch pad for ending the year on a positive note. I'm not going to use Santa Claus rally or late year or year end rally. I'm just going to say end the year on a positive note, because right now, overall, the market has just been going nowhere for weeks. And it could still go nowhere and end the year on a positive note on the very last trading day. So we'll see what happens. In the meantime, let's dive into the charts. As usual, I'm going to look at a summary using the stock market major indices and then dive into those individual charts that caught my attention. All right, let's take a look. Before I get started, as a reminder, I provide this content for educational purposes. Please invest and trade on your own time horizon and according to your own risk preferences. Share and like this content so the algorithm knows what's up. Any questions or comments, put them down below. And also feel free to subscribe to this channel if you want to get notified of new content. Now, also, if you want to skip ahead, there is a handy timeline down in the captions or in the description where you can click on any of the particular stock charts or indices that you're interested. All right, let's dive in. As usual, what we're looking at here first is my favorite technical indicator, the percentage of stocks trading above their 50-day moving averages, what I like to call AT50 for above the 50. This downtrend line right here, watch my cursor, is still in play. I was very hopeful in the previous week on this breakout, but it only lasted a day. So technically, the market's breadth is still compressing over time. You can see it's been compressing since June. This downtrend has been in place. So if Tom Lee's prediction is going to come correct, it means that this downtrend is going to stay in place and could be one of the key catalysts for the market finally unraveling amongst, a whole bunch of other more fundamental factors. So in other words, I am still a little bit on edge that the market has been unable to break out of this downtrend in market breadth. AT50 closed the week at 55.9%, so it's okay, but not great. I was hoping for it to launch into the overbought threshold. Now, the longer term indicator of market breadth, the percentage stocks trading above the 200-day moving averages, which is AT200, actually conveniently remains above the previous downtrend. So this is a point of hope, and this is why I can still look at there being a launch pad for the market to end the year on a positive note. So I think the market is still ready to end on a positive note, even if the short term still does not look great. Okay, let's go into S&P 500. I will change the indices here. You can see S&P 500 ended the week on a positive note, up 0.9% for the day, Friday. And this is after on Wednesday, the market sure looked ready to complete this 50-day moving average breakdown. On Wednesday, the index dropped. Let's see, what is that? The index dropped 1.2% and looked ready to just keep going down and challenging last month's low. But buyers stepped in right away the next day and popped up. And the unlikely, I'll get into the individual charts to show what was the surprising positive catalyst that saved the market. Because before this, you can see it was this steady march lower as the fears of the AI trade continued to weigh on the market. Still, we have this double top from the Fed's rate cuts, ironically enough. I mean, Tom Lee talks about the Fed not being supportive. The Fed has been supportive with these two rate cuts, and the market instead has topped out on both times. So we have this double top that's still in place. The market did make a marginal all-time high after the last Fed rate cut, but then proceeded to sell off. So this is where we are. And for those of you who are more technically minded, this black line here is called the Bollinger Band. You can see it squeezing down. So we could be setting up for a big breakout or big breakdown when this squeeze resolves. The NASDAQ looked even worse than the S&P 500 on Wednesday's breakdown. And it closed the week on a positive note. Note how conveniently it bounced off of the 50-day moving average, which is that red line. Let me zoom in so you can see better. And it closed the week at 1.3%. On its last rally, it didn't even come close to challenging the all-time high. So I can't even say there's a double top. Instead, what could be happening is two lower highs, which could be the start of a downtrend. But for now, given that it survived this 50-day moving average breakdown, I'm going to assume that the launch pad or the runway is still open for the NASDAQ to end the year on a positive note. And small caps look even better positioned to end the year on a positive note. You could see even with Wednesday's sell-off, which was 1.1% down, the iShares Russell 2000 ETF, ticker symbol IWM, held perfectly at uptrending 20-day moving average support, which is this dotted line, and ended the week with a 0.8% gain on Friday. You can also see the Bollinger Band squeezing down. So just like the S&P 500, we could be setting up for a big breakout or breakdown. But at least the runway looks clear enough for it to at least challenge its previous all-time high. As usual, I position myself bullishly with some call options on IWM on this nice setup here. Now, the VIX also suggests that we are all clear. A reminder, I have all these indicators here for a lot of the turmoil that's happened over this year. Big volatility collapse. The VIX dropped to 14.91, a drop of 11.6%. It's close to the lows of the previous week, close to the lows of the year. So complacency is back. There is no fear in the market right now, essentially no fear. And again, this means that we could be setting up for at least a positive end for the year. Okay, let's dive into some individual stocks. I have a variety of industries and narratives that are in play. Caterpillar is a key uptrend, is a stock with a key uptrend in place. Let me just peel it back so you can take a look. Very strong rebound from the tariff drama, trauma, and noise. Almost straight up. I mean, it's had some bumps and bruises along the way, but overall, the 50-day moving average, that red line, is held up as trend. Wednesday's pullback was pretty sharp, 4.6%, but the stock ended on a dime. You can see that right here. I'm going to zoom in. You can see that with my cursor right there. And I went ahead and just bought a January call spread. I think it was 600 to 620, 600 to 615. I can't quite remember. Presuming that there will be some more room to the upside, maybe towards the all-time high in coming weeks. So Caterpillar, ticker symbol CAT, is a key sign that overall sentiment remains positive for a year-end, positive year-end, because its strong uptrend held strong, okay? Now DoorDash, ticker symbol DASH, is another positive sign. Look at this. It collapsed 17.5% post-earnings. Today, it did, let me zoom in again so you can see, it did fade from its all-time high, but it did finally close, as I suspected it would. It closed its entire post-earnings loss from last month, and in the process has broken out bullishly above converging 50-day moving average resistance and 200-day moving average resistance. 200-day moving average is that blue line. So on Friday, it gained 1.4%. Great move. This is another bullish sign, particularly given the business that DoorDash is in delivering meals and other retail goods. Another positive sign. I mean, when the cruise lines are having a good day, how can you be bearish, right? This is Carnival Corporation's ticker symbol CCL. Market loved their earnings report, 9.8%. Apparently, bookings are very strong. Now, granted, CCL, Carnival Corporation, did not get as high, did not quite challenge its high of the year, but this is still a very bullish follow through to last week's support, confirmation of support of the 200-day moving average and 20-day moving average, and the breakout above the 50-day moving average. So if cruise lines can be bullish, how can we be bearish, right? That's the question I keep asking myself. And here's another one. This is, of course, this is a recovery play, United Parcel Service, ticker symbol UPS. But it had last week, it had a second breakout above its 200-day moving average. This time the breakout is held. Now, again, just like CCL, it's not even actually in this case, it's not even close to getting to its 2025 high, but you can see very slowly a recovery is in place. UPS, United Parcel Service, ticker symbol UPS, is of course delivers packages. Again, that's another consumer dependent name, right? Of course, it's businesses selling to consumers and sometimes business shipping to businesses, but overall, this is another indicator that the market at least is starting to believe in some kind of positive future, and this could help us have a positive end to the year. Now, I mentioned earlier with the S&P 500 and the NASDAQ that there was an unlikely source of recovering the AI trade and also tech in particular, recovering sentiment, and that was Micron. Sorry, let me switch the logarithm here. That is Micron. Micron Technology, ticker symbol MU, had a fantastic earnings, 10.2%, great bullish follow through the next day, 7% up, and it closed at a new all-time high. Sorry, I didn't label that. I'll zoom in so you can see. You can see here it passed, just marginally past the last all-time high. This again is bullish. When important stocks that are part of an important narrative are making new all-time highs, that is a positive and bullish sign for what could be ahead, at least in the short term. And just like Caterpillar, Micron is another one of those strong stocks that has been holding very consistently to an uptrend line. It's tested its 50-day moving average twice now in the last month and a half, and is held up firm. Okay, so that's very positive. Now, there are other stocks that are kind of on the edge of being positive signs. So here's Microsoft, ticker symbol MSFT. It is holding on to 200-day moving average support. There's several stocks I saw like this, but because it's below its 50-day moving average and that line is starting to decline, this is more of a cautionary stock. So great. It's bullish that it's holding on to this longer term trend line. I even added to my holdings based on the last time it held on to the 200-day moving average support. So, of course, I'm rooting for Microsoft to eventually break out above its 50-day moving average. Another one that I'm holding is Dell Technologies. It's also in the center of the AI narrative. This one is a little bit more tenuous. So if you could see here, right before earnings, it held on to 200-day moving average support. I breathed a sigh of relief. I was hoping that Dell was now clear to go ahead and rally right through its 50-day moving average resistance. It failed to do that. In fact, it stopped short. I'll zoom in again so you can see it stopped short. And then sellers took over. And of course, with the fears of the AI trade taking hold, it came down, and down. And now it's almost tested. It almost tested again its 200-day moving average. Today it bounced 2.8%. I breathed another sigh of relief, but I'm afraid that Dell may be running out of steam here. So I am on alert for this one. My stop loss will be below November's low. Right now I'm clinging to some gains, some small amount of gains in Dell. Vertiv is her holdings, ticker symbol VRT, is my favorite AI-related stock. I'm also in the THNQ index ETF, which would be the last thing I sell if I'm abandoning the AI trade ever because of technical breakdowns. But you can see here, I also breathed a sigh of relief. I was ready. I was on alert when the AI trade was blowing up on Wednesday, when Vertiv lost a whopping 6.7%, broke down below this important support line. This purple line represents the prior all-time high. Let me move it over here. And you can see it bounced perfectly. Well, not perfectly, but it bounced pretty well in November off of that line. And I was hoping it would just now resume its uptrend and make new all-time highs. Let me just pull back so you can see it's been a nice uptrend, very choppy. DeepSeek and the April tariff trauma, drama, and noise took it down to new lows. And I wrote about how nervous I was adding to my position there, but it worked out. Anyway, My stop loss would be below this low. And I forgot to mention that what was going on with the AI trade this week? Well, there were rumors that Oracle was going to pull back on some of its build out, and that caused a ripple effect in the AI trade. And so that's what caused a lot of the weakness going into Wednesday. And of course, Oracle denied the rumors and things snapped right back. This is why it's always important to watch the technicals, look for confirmation, and also not to believe rumors and not chase things down or up, actually. So Vertiv, ticker symbol VRT, is hanging in there, but I am on edge. I have a lot of profits here I want to protect in VRT, so I will be very strict about my stop loss if Vertiv closes below this low of the week, because that would represent a confirmed breakdown below the prior all-time high, which is a very, very important key line of support now, because it defines also this big breakout that happened back in September. I mentioned Oracle. It wasn't on my agenda for today, but let me just show you what's been going on. I have written about this before. The CDSs, the credit default swaps, continue to increase as Oracle's price decreases. You could see the importance of that rumor. Oracle dropped suddenly another, what was this? 5.4%. I had earlier claimed that it seemed like panic and fear was reaching a climax in Oracle. That decline on Wednesday disproved it. Clearly, there was still some more fear and panic to squeeze out of the system. Today's big jump, so it survived on the next day with a small 0.9% gain, and then today it jumped 6.6%. I didn't have time to check on whether there's any specific news, but look at the volume down here. Very important, right? Very important to see that today volume really stepped into Oracle, so that's positive. I'm thinking that panic and fear may be maximum. It has reached its peak already, but the technicals will confirm that. And of course, there's all sorts of overhead resistance that Oracle is going to have a hard time busting through. I mean, the 20-day moving average is in a downtrend. The 50-day moving average is in a downtrend. The 200-day moving average is still up, just barely, but it's going to curve down soon. And then you have all these other lines here. So Oracle has a lot of overhead resistance. It's not one that I want to invest in until it's broken through those clear lines. In the meantime, it could be great for short-term trades for me. Finally, there's Accenture, whose business relies heavily now on its generative AI consulting and engagements. It dropped on earnings, but I point this out as a positive because note, it's going to be hard to see with the dotted line, but note how after the gap, buyers stepped in, and then buyers stepped in again the next day, drove it up 0.9%, reversed all of the earnings losses. Yes, it faded from 200-day moving average resistance, but all it's going to take is a close above that 200-day moving average, and Accenture, ticker symbol ACN, could be off to the races and continue this recovery that started in earnest back in November. So I had this one on my watch list. I was a holder earlier for a trade. I got out, and now I'm looking to get back in if the technicals will support this rebound. And again, I like ACN because as an indicator, because it has pivoted its business into doing generative AI engagements. Now, on the bad side, maybe this could be good. I've also had my eye on stocks like FactSet Research Systems, ticker symbol FDS, because there's a lot of fear that particularly the deep research capabilities in these AI platforms is going to take out the business model of financial market analytics firms like FactSet. It had a big drop, 7.7% on Thursday post earnings, but then buyers stepped right in and drove the stock back up again 5.5%. So this is a positive. It's a positive that maybe, just maybe FDS is turning the corner. Of course, it has a steep recovery to come back to reverse those previous losses, but that's why I'm interested, because of the technical support of bottoming and a potential bearish to bullish reversal, the upside is tremendous here. I think this stock could rally if technical conditions come together all the way back to at least its 200-day moving average resistance, which of course is now declining. But what I want to see is a complete reversal of these post-earnings losses before I get interested in getting back into FDS. Another consulting company, I should have done this one first, Booz Allen Hamilton Holding Corporation. I think I talked or wrote about this before, got my interest now, even though it's gotten hit for a long time now, and all of the cuts in the government really hurt Booz Allen Hamilton. But what I like is this news here that the chief executive officer stepped in for over $2 million worth of shares. Now you can see overall net, the stock hasn't gone anywhere because today, sorry, not today, but earlier this week, there was news that the CFO resigned and the stock promptly plunged. What was this? It plunged promptly 7% on that news, and now it's back under the declining 50-day moving average resistance. Again, it's that red line. And look at this. Buyers attempted to recover the stock 3 times in a row. It faded from that resistance. And today, buyers just lost heart and couldn't do it again. However, look at this big bar here. Huge volume here. I'm hoping that has drained most of the selling pressure. What was ironic about this drop, though, is that I actually had a covered call position where I had sold an 85 call against my shares. And because of this drop, I was able to take profit on that call and roll out to a $90 call, $90 strike call that's going to expire in January. So now I really don't mind if my position gets called away, because if I get called away at 90, I'll have a very nice profit in place on this one. All right, so that is ticker symbol BAH, Booz Allen Hamilton. Now, my big disaster of the week, I probably should make this a feature every week, is to show what is the big disaster, because there's lots of wins, but there's also the at least that one stock that really ruined my mood, or didn't ruin my mood, because I don't let mood affect me, but just, makes me kind of clench my fist. This is Weston Holdings. It's a food processing company. They're known for their French fries, I think, for processing potatoes, really. French fries being the biggest thing. And I really thought the bearish to bullish reversal was in place. I thought the stock had stabilized. I was so close to just taking the small amount of profit I had before earnings and not taking the risk. Those of you who read my blog in particular know that I'm a coward when it comes to sitting in stocks through earnings, because you just never know. You can do all the analysis you want, and then the business turns around and surprises you. That's what happened with ticker symbol LW. I mean, look at all of these earnings reports that LW survived, right? It survived in April, it survived in July, and it survived in October. So I was really feeling good, even though I was nervous and wary. And so the stock completely disappointed. I didn't even have the heart to look at why the stock crumbled. It tumbled 25.9% down to a new low. In fact, it's a new multi-year low going all the way back to the pandemic. Once I do some research and just understand what happened, I'll determine whether I'll just close up shop on this one. Because of course I went from a profit to a loss on this stock. It's well overextended to the downside, so I do expect some sort of rebound. So I'm hoping if I do decide to sell, that I can sell into that rebound. All right, now back to the good news. Rio, I don't think I mentioned this one on my blog or in the stock or in the videos, but this has been my favorite play for several months now. I had a thesis about central banks, particularly in the US, being forced to cut rates, even with inflation sticky, even with inflationary pressures looming. And I wanted to be sure that I was well positioned in commodity related plays. Rio, BH Group, or BH, they used to be called Billiton, sorry, and FCX, the copper company, Freeport McMoran. This is the best performing one. Rio up almost 20% of my position, I believe, since I got it, and it's this nice breakout. Now, overall, the stock has gone nowhere for years, right? So what I'm hoping is that this big breakout is the beginning of a big secular move. And so far, so good. The other reason why I'm encouraged seeing this constant uptrend, it's of course kind of getting extended because it's been trading well above its moving averages for quite some time, is that this streak higher matches in parallel to silver. Silver is all the rage right now. You can see, actually, let me move this all-time high. It has just been going up nonstop. People are just buying and buying and buying silver. I really missed this breakout earlier in the month. Actually, this was at the end of November, but that was a clear buying signal. I should have gotten back into silver, but I didn't. So now I just wait for another sort of time for when price cools off or something. But I think commodity plays are going to be very strong 2026, unless there's a big economic calamity, which I don't expect. This is where I want to be. I want to be in the commodity plays or commodity-like plays. over all else, because a lot of the stimulus that's happening in the US is going to be consumptive. It's going to consume, and commodities are at the center of consumption. Okay, so that's it for today. As you know, I'm trying to keep these shorter. As I said before, if you have any comments or questions, put them down below. Please like and share this content so the algorithm knows what's up, brings more people here, helps motivate me to keep doing these series. And of course, subscribe to the channel so you can get more. And if you want to read more details, check out my blog, drduru.com/122. I will see you later. Thanks for coming by, and have a good holiday season if I don't see you again until 2026.